market. Now, in looking at the NASDAQ, and as noted, we recommended that subscribers weigh themselves heavily with the NASDAQ on the long side of the market, and you can see that as of August 28th, we've almost regained the bottom of the first leg down in the bear market, the March 17th low, 1668.57, 1668.01. So this is the strong sister index, the tech sector. That shouldn't surprise us. One of the things that we don't know about the future is just how revolutionary technology is going to be, and that can drive stock prices higher. But what we do know is that we want to, in entering the market, go with the strong sisters, so to speak. Go with the indices that are showing the greatest strength, and the NASDAQ has been doing that. So therein lies our recommendations for subscribers to weigh their portfolios in favor of the tech sector. So the comment that we made this past Friday, August 28th, the NASDAQ 100 continues to put on an impressive display. Notice the October 14th high at 1470.99, which was exceeded in early June. This is the high we stand on the threshold of in the S&P 500. So you can see that that violent two-day short covering rally, dropping back to the S&P, which we are approaching as we speak, we actually exceeded that during the June run and the correction, and we've left that far behind. So this index is the strong sister. Now, looking at commodity prices, this is very interesting. What we have posted here is the advances which took place in commodity prices in the aftermath of the major bust cycles in 1920, 1949, 1974. We also had a bear market rally in 1980. So we are not seeing as aggressive an advance in commodities as we're seeing in the stock market. That's not surprising. We did push to a new high above the June 11th high, just incrementally, without follow through to the upside. But a couple observations I believe that are in order. Basis the cash GSCI, this Goldman Sachs, and the cash CRB, we fractionally exceeded the June 11th highs. The decline we've experienced, if followed by an advance to new highs for the move, would be very healthy in correcting the overbought condition in the markets. If this occurs and the uptrend is resumed, it could result in my giving buy recommendations on the second breakout to new highs. So we are watching these highs very carefully, basis the Goldman Sachs and the CRB index. If the second leg up in an overall bull market, if this is a second leg up in an overall bull market, the 1 month advance does not conform to historic norms of what one would expect on either a percentage or time period basis. It is too abbreviated. So that was as of August 18th. So this hardly qualifies as a completed leg up in a bull market. But if there's backing and filling here, that would be healthy for the market. Some of the markets are in an quote-unquote overbought condition, having come a long way. The copper market, the crude oil, gasoline, and so on. The final comment from last Friday, given the continued strength in the stock market and our forecast for stocks and commodities moving in tandem, the probabilities favor a continuation of the uptrend in the Goldman Sachs index. So obviously I expect the probabilities favor that. In terms of long positions, though, right now we've been on the sidelines in this market. We have a recommendation that did go off in the wheat market today, Monday, and there is a posted video that you can look at with regard to the background for that trade that we have provided for subscribers. So we are definitely looking at the different commodities, individual commodities, determining which ones are in the strongest position, which are in the weakest position, and the wheat market is in a fascinating position right now. Now, looking at the crude oil, has very much parroted the Goldman Sachs index, since the Goldman is weighted by the energy complex. We did push to an incremental new high in the cash crude oil above the June 11th high. We sold off. As I'm looking at the trade this morning, we're down about $3 a barrel. This was the close as of Friday, so presumably if we close where we're trading right now at approximately 10:30 California time on Monday, then we would be down $3. So the market is definitely doing some backing and filling, and having moved from 30.81 to 72.68, you can see that the market's rallied about 130%. That's a very, very sizable move, but not unlike what one would expect based upon history. The law of action and reaction The action being this 78% decline in crude oil prices, and so we are experiencing the reaction to that extreme oversold condition, with, of course, the government greasing the wheels as far as the economy. And moving to our next chart, which is the gold, a fascinating market for us to be focusing on, in that historically, when we've seen bust cycles, the gold has had the potential to act like other commodities during the bust cycle. However, the market has been holding its own in very impressive fashion. So we have, on a technical condition, 3 lower tops, the March 17th, 2008 high having been an all-time high, above what had previously been the all-time high at $850 an ounce in 1980. Many of you will remember that. So we pushed to new highs in the market by only by about $180. Then we did see the market move down in tandem with the extreme deflation in the stock market, along with the energy complex. But this market has, in a sense, divorced itself in certain respects by virtue of not declining on a percentage basis to the degree that one, quote-unquote, would expect, given the nature of the decline. So certainly there was a fear factor that was factored into the price of gold. But at this juncture, if we have an inflationary policy by the government, and we do, then you can have a fundamental argument for this market moving higher. More important to us is that if we do exceed those all-time highs, that could put this market in a very bullish position. So at this juncture, I'm watching very closely, but this is one of the markets that is going to be weighed in the scales as far as what is to take place in overall commodity prices. Another market which is very important that we're watching right now is the U.S. government bond market, the 30-year yields. Very important to watch. It's the other side of the coin of the gold market, in my estimation. And so there are many things many dynamics at work here that could set us in motion for some major plays in the markets, and we're keeping subscribers apprised of that. And so we invite you, if you've not visited our website and spent time on it with regard to our philosophy, want to invite you to do that. And we look forward to having some of you as subscribers, and we would be privileged to help you navigate these markets. And we want it to flow to the bottom line. That's what it's all about. So have a good day and profitable trading.